What's going on YouTube? Alchemist here. So I'm just going to do a video today on market structure. Now, market structure is something that I know I have personally struggled with in the past, just not being able to identify the direction of the market, whether we're bullish, whether we're bearish, and especially in a ranging or consolidating market. Now, I will preface by saying, yes, I have been I have been a member of multiple different communities in the past, and they all sort of look at structure in a similar way, but with their own different nuances. And as I trade AU and as I only trade London session, I hadn't really found any that would cover it for that. So what I've actually done is I've gone through and done all of my own back testing to sort of work out what works for me. So in no way am I telling you that you need to be using these set and fast rules. I just like to be as systematic as possible when I'm trading, so I don't want to have to use any human discretion. So my idea is the more that we can learn to sort of trade like a robot and emotionless, the more we can continue to perform on a consistent basis, which hopefully would yield us consistent results. So what I'm going to do is I'm just going to look at 15-minute structure for the whole month of May up until now. And we'll just sort of see if we do follow the structure in the way that I've set out here, whether we would stay on the right side of the market or whether we'd be caught out on the wrong side. Okay, so starting off, so from this line here, this is the 2nd of May, so there was obviously a weekend, so I couldn't do the 1st of May. And what we want to look at is how price was reacting previous to where we're looking at now. So for me, what I'm using as structure points is a minimum of 22 pips, and I'm looking for a pullback of 22 pips, which is then broken. So for me, I can see this here. Well, let's just see how many pips this is. Yeah, so this is 24 pips, and then this was broken to the downside. So then I can clearly just mark this out like this, make it a solid line. And then I know that now we are in a bearish market because this last lower low has now been taken, which would mean that this here would be our lower high. So if we look at the rules I've got here on the right hand side for mapping structure in a bearish trend, so we want to map the lower low in the bearish trend. Okay, so we knew that this was our lower low. Now we wait for that lower low to be broken. It was broken. Once the low is broken, we map the highest point in between the previous lower low, which is here, and the break, which would result in giving us our lower high. Now, once we have this lower high, we just wait for another pullback of at least 22 pips, and then draw the line below that. Once that line is then taken, we can then identify that we are continuing bearish, and we can identify our next lower high being the highest point since that break. Now for me, I need at least a body break and then an additional follow-up candle as well. So I've got here 22 pips, plus I need 2 times body close above or below. And I've also got a note here for myself that premium and discount works quite well on the 15-minute. So now I've identified that we're bearish, and so before May, we were bearish, and we've broken this lower low. We have this as our lower high. Great. So what are we looking for now? We're looking for a pullback of another 22 pips. Okay, so that is just over 22 pips there. We can mark this out here. Now, if this gets taken with 2 candle closes, so as we can see, if I can just zoom in, this candle closes below, this candle also closes below, and the next one does too. So we've now broken that again. All we need to do is above this thick black line, we just need to use the highlighter tool to map out the highest point. Now we know that the range we're trading between is this high, and it wasn't confirmed at the time, but this low. Now using premium discount, we can obviously just look, okay, when price comes back up here, we can continue selling, but that's a discussion for another topic. So now that we know that, we're now looking for price to give us another pullback of 22 pips. That one doesn't quite make it. However, this one does. So we can say, okay, price is now pulled back. Does this give me 2 body closes below? So no, we have 1 here, and then the next candle trades back up straight away. So whilst this is a lower low, this has not yet been confirmed as a lower high because this high failed to put in a low lower than this one with a continuation, resulting in the fact that this then becomes a targeted high, which again, I will cover off in another video. But essentially with the targeted highs, we can assume that they will get taken. And voila, what happens? It does get taken. So now when this gets taken, what we can now say that we are bullish. We can mark this out just as a thick black line. Okay, and now we need to find our next higher high. So to find the higher high, we again just need to see a pullback of 22 pips. This one is only actually a pullback from here, which was not enough. This one is also not enough. So we're going to have to take this whole pullback down here, okay? Which would mean that this is now our higher high. Oh, and down all the way down here would be our higher low, or the low that we're trading between. So now the trading range is between here and here, okay? Now we just look to see what's going to get broken next to see what the trend is going to be. So does this get taken or does this get taken? Okay, so here, again, we don't have two body closes. Here we have one very small, insignificant, and there we go there. So now we know we're continuing bullish. And now all I need to do is below this line, I just need to mark the lowest point, which of course is here. And now that is the low. So essentially what we can then assume is that as long as this holds, price should continue bullish, okay? This essentially would be our demand zone, okay? But we're not talking about this here, we're just talking about structure. So this is our low. To find our high, we just wait to see another pullback of 22 pips. So there we go. And then this has been broken. This is our higher low. Now we wait to see another pullback of 22 pips. There we go. However, in this case, as you can see, we don't actually break above. So now the next point we need to look at is where our previous lower high was. And then we can say that once this lower high is taken, price has now shifted to becoming bearish, okay? So here we have this body close below. We also have this body close below. We get rid of this. We can now say price is bearish. And now all I need to do is just identify the highest point above this line, which is right here. And now I just wait to see another pullback of 22 pips. Okay, so there we go, 22 pips. And I didn't just pull this 22 pip number out of my ass. I've actually done quite a lot of back testing on this, and that's sort of the number that I found AU works with the best. And we can see through all of the structure we're going to map today, it's very rare that we actually do get caught on the wrong side. So now this is broken. This is our lower low. This is our lower high. We're waiting to find another lower low. So we wait for a pullback of 22 pips. That one doesn't make it. That's very small. So then we look at this whole thing as one leg. And there we go. We have our pullback there. So essentially we want this low to be taken. So once this body closes below and then I have another body close below, we just take this here as our lower high. Okay. So at this point, our trading range would be here, up until here. Okay. If we go back to the rules again, we map the lower low and the bearish trend. Here we go. Wait for it to be broken. It's broken with two body closes. Once it's broken, map the highest point in between. We've done that. Now we just wait for price to give us a bullish pullback of 22 pips. So there we go. So now that we've seen that pullback, we can mark this out here. Here we don't get a body close below. Here we don't get a body close below. Here we get a body close below with a follow through. And you can see here as well, guys, the reason why I've got this here is if we were just using wick breaks, we would have turned bullish at this point and we would have been on the wrong side of the market. However, that's not the rules that I've set for myself, so we won't need to discuss that. So now that we've got this break here, we just want to identify where our next point, our lower high is. So there it's there, okay? Essentially just following the rules again, waiting for a pullback of 22 pips. We get it there. So we wait to see two body closes below here. There we go. And then we mark out this point. And we can see it's very rare that this is actually disrespected. So we can see once we have this confirmed lower high, it becomes a strong high. And it's a protected high as well. So essentially we want to be trading away from it towards the weak low, which is weak because it failed to set a higher high. So now that we've got this, we just again wait for a bullish pullback of 22 pips. Cool, we get one there. Wait for two body closes below. 1, 2. Then we mark out the highest point. Cool. And then at this point, this is one place where we see price disrespecting the rules that I've set. As what happens here is we do actually get 2 body closes above. So technically at this point, we should be turning bullish, with this being our last, essentially this would be the low, this is a higher high, and then we'd want to see a higher low here. So what we would essentially want to see once we see this structure being disrespected is price to come here, set a higher low, continue on to make a higher high, and so on and so forth. However, this is not the case. So if we were to be looking for longs in here, we could be caught on the wrong side of the market. But I've actually inspected this piece of price action. So if we actually did come into here, there was actually no confirmation entries for us to be going long anyway. So that would have saved us from entering and being on the wrong side of the market. So now obviously we can see that this is quite a significant pullback. We want to see what gets taken first. Does this get taken and do we continue bullish? Well, no. The low gets taken and we turn bearish again. So there's a very short period there where we were bullish just for this part here, but once this low was disrespected, we've just turned bearish again. Now we wait for a pullback of 22 pips. Don't get it there. Definitely get it there. So then we can set this as our new low. This has been broken. There's 1 body close, 2 body close below. Therefore, this is now our lower high. It gets a bit confusing saying it over and over again. All right, so there's our lower high. We just wait to see another bullish pullback of 22 pips. That's 20, doesn't make it. It's 19. Okay, here we go. There's a nice pullback there. So essentially at this point, we'd be looking for this low to get taken, and the other place where our actual range is here. So currently we're trading between this range, and this is quite a large range. It's 100 pips. It's not ideal for a 15-minute sort of zone, but it's also just to keep us on the right side of the market. We can see that this sort of price action here is very, it's consolidating, it's ranging. And oftentimes when we see price like this, it's likely that we've arrived at a 4-hour level or a daily level. So if we actually just quickly check, I'm just going to put a horizontal line like that into our minds too, that when you see price on the 15-minute sort of just ranging sideways for a bit, it's likely that we've come to an important zone and price just needs to rebalance. So essentially those days probably aren't the best to trade. It is just good to monitor and sit on the sidelines unless all your rules are ticked. But now we just return to the exercise again. So we're waiting for one of these to be taken, either the low or the high. So we can see what happens first. Well, what happens first is the high gets taken. So here we get 2 body closes above. So we can get rid of this, and then we can mark this out as our low. So now our new trading range would be between here and here. Okay. Now that price has turned bullish, what are we looking for? So we're mapping out the higher high. So we've marked it. It's been taken. We then we wait for a price to give us a bearish pullback of 22 pips. Okay, so we get one there, but this high is never actually taken. Okay, we can see that price doesn't actually return bullish. What happens before that occurs is that the previous low is actually taken. So once we get these 2 body closes below this line, we then mark out the highest point in between, which is a very long way away, but that's okay because it will change shortly. So we can see that now this is our high, and we're waiting to see our low after we get a pullback of at least 22 pips. So there we go, we've got it there. Okay, we've got 2 body closes there. Now all we need to do is mark out the highest point here. So now, rather than trading all the way between this high and here, okay, which again is a very large amount of pips, 180 pips, we now only need to focus on this range here, okay, 30 pips. Once this low is taken, we look for another bullish pullback of 22 pips or more, which is right there, okay. In this case, we don't actually get 2 body closes below because this one here fails to close below. We get 1 body close below, but then the next one comes straight back up. So this, in fact, is going to be an NFT, and no, not like Dogecoin or whatever they are, just a no follow through. Okay, so that to me is a no follow through. So we're still here. We're looking for another pullback of at least 22 pips. So there we go there. Now let's check this time if we actually get two body. No, that's one. This one trades back above. Here we go. Okay, so all of this here, we're just still trading between this zone and this zone. But once we have this body close below this line, followed up with this candle, we can then identify our new high, which would be in fact this one. And let's just make this a thick line rather than a dotted line. Okay, again, sound like I'm repeating myself, but honestly, that's the best way to do it. 22 pips, no, that doesn't qualify. This one qualifies. So here, we can see that price doesn't actually come back to break this, but in fact, we take the high first. Okay, so this closes above, this one closes above. So now we've turned bullish. We can get rid of that and we can mark this as our low. Now we wait for a bearish pullback of 22 pips. Okay, we get one there. So once this is now taken and we get two body closes, ooh, no, so we get one above and then this one closes below, this is below, this is below, this is below. So that is actually, I'll just leave it there and mark it as an NFT. No follow through. Okay, and we can see that the reason why I've set this rule is, say for example, we weren't using it and we were just saying that one candle was enough. So say in fact, we're just going to go back to saying that this was actually a break of structure. If this was truly a break of structure, then we would take this as our low and we would wait to be looking for longs again here. So because we'd broken above, the idea was that we would continue bullish. We'd break above, we'd be wanting to take a long from in here, and that probably would have been an opportunity to do so. And then we would have just copped a stop loss. We could have probably, after this was liquidated, we're like, okay, we'll get in now. We probably would have taken another 1 or 2 losses. So just to stay away from things like that, I've set these rules and I've found that they work for me. Now I want you guys, if you're interested, to go back and do your own back testing, especially on if you're trading different pairs, because these are the characteristics that are going to be individual to the pairs you trade. And that's why it's also important to just focus on one, maybe two, and then just really understand the characteristics of it. Okay, so we'll just go back now. We'll just continue off where we were going. I'm hoping this video is not too long, but honestly, I want you guys, if you are struggling like I was at the beginning with market structure, watching this over and over again is going to do you a world of good. So this is a no follow through. So we're waiting for this. So because this failed, this is still our most recent break of structure, so we're still trading within this whole zone. So now we're looking for a bearish pullback of at least 22 pips. There we go. And then this gets taken, and yes, we get one body close above, two body closes above, so we can move this to here. So this is now our low. We can disregard that one. Again, we're just waiting for another pullback of 22 pips. So we get one there, that's 30 pips. So let's see if this high gets taken. Yep, it gets taken and we get another body closed above. So now we can mark out our low. And now look at this one. No, that's not 22 pips. That's not 22 pips. That's not 22 pips. So we'll have to look at this whole leg down here. Okay. Now what we can see here is obviously this was our last high low and this has now been disrespected. So price should essentially be turning bearish. Just mark these back up as a line just to stay consistent. I've got OCD with stuff like this. Cool. All right, so now that we're bearish, we can say that this is our high. We're waiting for price to give us a pullback of 22 pips. There we go. Idea would be that this low fails and we continue bearish. However, that's not the case. So I'm not interested in anything in here. Obviously, there'd be a supply zone here. There'd be buy sell wicks in here that we could look for short counter trend trades out of. But that's not what we're looking at. We're just looking at market structure. So essentially, what we need to say is the low going to go first, or is the high going to go first? Okay. So in this case, the high goes first. We obviously get multiple candles closing above. Close that. So now we just mark out our low as this one. So essentially our range would be from here up and until we get a pullback of 22 pips, and that's when we can actually mark our high. We can't mark our high here yet unless we get a pullback of 22 pips, which we don't. Do we get a pullback here of 22 pips? No. This one looks like it would be. Cool. So because that gives us a pullback of more than 22 pips, we can say that our range is actually from this low all the way up to here. Okay. Once this is broken, we then identify our low, which is this guy. Okay. Look for another pullback of 22 pips. There we go. So if the idea is to continue bullish, we would see this close above with 2 candlesticks. In this case, it does. So then we mark out our low, which is this guy. And then the idea again would just to see a pullback and then this higher be taken. But this in fact does not happen. Well, it probably does in the future here. But what happens prior to that is the low actually fails. So not here because these are just wick breaks. We get a body close here and then it can another follow through. So now we've turned bearish again and we can get rid of this. Mark this as our high. And to identify where the low is, we just need to see a pullback of 22 pips. So there we go. That is our low. So we'd like to see this low be taken to continue bearish. So this is one scenario here where the rules that I've set again just don't exactly work perfectly, but it works about 85% of the time in what I've tested for this year on AU. Again, obviously, we're just going to have to adapt. These are not set and fast rules that we can use for AU forever. Market conditions always change, and with that, structure also changes, not in its characteristics and essence, but just in how many pips we should be looking for mapping. And as that sort of changes, I will be posting just to update you guys if I'm changing the rules that I'm working with. Cool, so what happens here is before this low goes, the high goes. Okay, we get this body close above, this body close above. So then we mark this out here as our low. We already got the dot there. And then we look for a pullback of 22 pips. There we go. And then we wait for it to be broken. There we go. So once that's broken, we just mark out our low in between here, which is this guy. And then look for another pullback of 22 pips. There we go. And we're looking for body closes, remember, 2 times. So what happens here? Do we get a bullish close first? Oh wow, this one actually went for a while. So let's mark out the low. I'm just going to use this tool. See which fails first. Okay. So the high does go first, so we do actually continue bullish. Now this as well, I just want to see what this price action looks like on the 4-hour, because you can see here price did consolidate for about a whole week, 7 days, where it didn't really move all that much. So if we go, so we're looking here. Can see that, yeah, so we would have had this demand zone here, we would have had this as our supply, very important 4-hour level, which with a refinement would probably bring us down to here if we look maybe such a long time. So if we go back to where we were looking before, apologies for that. Okay. So we were looking at this low and we were looking at this high and we were looking to see what fails first. So the high fails, okay? So we can close this, get rid of this, and then we can mark this out as our next breaker structure. We can see that whilst this bullish candle closed outside, the next 2 inside bars closed below, but then we did get another continuation above. So it doesn't have to be 2 times in a row. It just has to be 2, like after it, like within the same sort of time frame for it to be classified as a break. And now all I need to do is identify the low. To do so, it's quite simple. Just look at the black line, look at the lowest point. Now we're just looking for a pullback of 22 pips. No. There we go. So once this high fails, we have a new high low. And now we look for a pullback of 22 pips. Yep. And now we need to body close. There we go. And then this would be our low. Pullback of 22 pips. Nope. Here we go. So then we would wait to see this fail. Once that fails, we can move, oh sorry, apologies, it looks like the low actually failed first. So we can get rid of this. We can say that the higher low failed. Yeah. So at this point, this would have been our high, and we would be waiting to see our low set after we get a pullback of 22 pips. So we get it there. So that would have been our trading zone. And at this point, we would have been technically bearish. So we should have been looking for shorts. We can see probably here, this would have reacted off something to give us a trade in there. But now we're just waiting to see if after this, we're going to continue bearish. And to do so, this low would need to fail. Okay. Or would this high fail first? Okay, so whilst this low does technically fail with one body close, the next one comes straight back up. Not only that, but the high actually goes before the low. You can see here, obviously we get multiple candles closing above, which would then make this our low, and this would be our high. So technically we return to being bullish, and we should see that this should be respected. You could probably say that this here was a liquidity sweep because we didn't get two body closes below. So this would have been a sweep. And this takes us all the way up until today, 2nd of June 2022. So we can see that now this is our high. We haven't actually, this is our low, and we're waiting to see this technically fail, as this was just a sweep and previous structure was bullish. I hope that all makes sense, guys. It is a bit of a longer one. I hope that you take something out of this. And if you do have any questions or anything, please do let me know. I will be putting out more content like this in the future. And I am working on something behind the scenes as well. So if you're interested, drop a comment below. Please like the video if you've taken something away from it, and subscribe. It does help me a lot. And I'm looking forward to seeing you guys in the next one. Take care.